Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin chart as Bitcoin is trending down and looking like it might be actually breaking down. So with that being said, let's get right into the charts. And we will start over here on the Bitcoin USDT 4-hour candles on the Binance exchange, and you can see I have a couple trend lines dropped in here. That Bitcoin's price action has been essentially trading in between. That is, up until a few hours ago, Bitcoin actually broke down below this bottom trend line and is now continuing to sell off. So with that being said, Bitcoin's price could be headed lower and perhaps looking back at maybe support back in this area, which would come in around 27,000. You can see Bitcoin's price did bump along this zone for a while before pushing back up. However, I don't put a whole lot of weight in these triangle type patterns. I would put a little more weight in ascending or descending triangles, and in this case, if we drop in a horizontal line down here at the bottom of these wicks, this yellow line, this could represent a stronger level of current support for Bitcoin's price. As you see, Bitcoin's price does wick down into this yellow line and even below the yellow line, but does eventually close above this level back here. Also over here we see another wick down to the yellow line, but a close above, and right now Bitcoin's price is wicking down around that yellow line, which is coming in at around 27.7, and you can see the buyers are stepping up. Thus we see these wicks on the bottom of these candles. So the question is, can the buyers continue to step up, push Bitcoin's price up, perhaps back into this trend line, only to once again reject? And then if the bears can apply sell pressure, perhaps get the price back down towards this level here, or crush through that level and head even lower. Now, on the flip side, if the bulls can push the price up and through this lower trend line, the bulls' next target would obviously be a breach of the upper trend line, which would come in perhaps somewhere around 29.5 to 29.7, and then they would look to push up and set maybe another higher high, which you see they were able to get a higher high here, a higher high here, but that higher high here is actually lower than this previous higher high, and thus this trend is really just a downward trend. And so a higher high less than perhaps back here at this higher high level, which really is around 30,000, that is probably going to be a very strong level of resistance. Really, there's a zone between 30,000 and this higher high back here of 31,000. That is going to be a very heavy level of resistance for the bulls and their attempt of getting Bitcoin's price even higher. But at the moment, what we're looking at is if the bears are able to push the price down into essentially this zone here, this would be a key area to keep an eye on. A breakdown below this zone, essentially around 27,000, and Bitcoin's price could be headed much lower, which we can identify some of these key price targets by dropping in the trend-based fib extension tool. And we would do that by swinging from this higher high here to this lower low here, and then back up to the higher high back here of 31,000. And then with that in place, you can see clearly that for starters, the 382 level on the Fibonacci extension coming in around 29.8 has been a level of resistance. If you look back and check your 6 back here, we see rejection here, another rejection here. Once again, Bitcoin's price gets rejected here, and most recently Bitcoin's price gets rejected again right here, leading into this current sell-off. So the 382 Fibonacci extension level is going to be a key level for the bulls to breach if they have any hopes of pushing this price higher. and higher would probably look like something around 31,000, which again is where Bitcoin rejected from back here. But at the moment, the bears are in control of this price action. They were able to actually break the price down below the 786 level of 28,568 and essentially break the price out of the zone between the 786 and the 382. A lot of times, this is what I would call my kill zone. As long as the price is within this zone, I am actually looking for the price to break out, either towards the top side or the downside. And in this case, the price broke out towards the downside, which it did break down through over here. However, it did find support and eventually push right back up into the top of this 382 zone. Now Bitcoin's price is broken down again. The question is, can it push back up to the 382 zone, or will Bitcoin's price continue to break down perhaps to the 1272 level, which comes in at 27,000? Again, right back in this area here, which has been support previously. Now, if the bears can crush the price down to the 272 level and get it actually below that, the next target the bears would have their eye on is going to be the 1618 level, which comes in around 26,000. That would be the next key level of support for the bulls, or for the bears to try to crush down below. Now, with that all in mind, we will jump over here to the daily candles, which was the chart we were looking at last Monday on this candle here. And the Bitcoin price had moved into pretty much the middle of the EMA ribbon, and the bulls were looking for support and a push back out of the ribbons, which they did actually get throughout the week. However, by the weekend, the price rolled over and has been selling off pretty much ever since, and actually is starting to approach the bottom of the ribbon. And a breakdown below this ribbon, typically, if you look back here, leads to a further sell-off. But on the flip side, if Bitcoin's price can find support within the ribbon, that could lead to a push back up towards the top side. Now, the reality is, any push back up towards the top side would run into resistance, more than likely, at this 30,000 level and the 31,000 level, which again, these two levels are the key levels of resistance on the top side. Now, if Bitcoin's price fails to find support in the EMA ribbons, then Bitcoin could sell off all the way back down to perhaps this 120-day moving average, which is the white line, and you see where Bitcoin broke down below the ribbon back here. It found support right at that moving average back here. And so again, if Bitcoin does lose support of the EMA ribbons, there's a possibility that Bitcoin's price could sell back off towards this 120-day moving average, and that would put Bitcoin's price somewhere between probably 25,000 and 26,000, depending on how long it took for the sell-off to actually happen. But right now, what's grabbed my attention is the 4-hour candles, the breakdown below this bottom trend line, and whether or not the bulls can apply sufficient buy pressure on the bottom side. Again, see these wicks indicate buy pressure and push the price up, or will the bears be able to crush this price down, perhaps back towards this 27,000 level of support? So I think that pretty much wraps it up for this video. If anything major changes over here on the charts, I will do an update video, so now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.